Well, hello everyone. Welcome back to the channel. So I have an interesting video topic tonight that I want to go over that I've actually gone over before, but I feel like it's important to rehash this because believe it or not, Jay Pestrichelli, the fund manager of YieldMax, has actually written books on hedging your investments, and this is very important to know. And he actually breaks down exactly how you can hedge investments in his book that he wrote that I'm going to show you all. And we're going to go over his 5 key points for hedging investments. And this is something that's come up before, but I thought it would be important for all of us to see that Jay himself has actually said this, because it's come up in the times I've interviewed him, but not a whole lot. But anyway, this is directly from the horse's mouth, so to speak. So I want you all to see this. First, I'm going to put in a quick plug for his book, which is available on Amazon. It's actually gone up since the last time I covered, since I covered something related. The book has actually gone up. It's like 24, 25. It used to be like 17 something, because I went and looked. So that's the YieldMax effect, I guess, right? But anyway, the book is called Buy and Hedge, the 5 Iron Rules for Investing Over the Long Term. And it was written, I want to say the book was written like over 10 years ago. So he was definitely way ahead of his time when it came to this. But anyway, to start off, so let's see. I have screenshots here of what I want to read. I just got to get them up here. So the 5 rules, here's what I'm going to do. I'm going to go over the 5 rules and then a description of each one. So rule number 1, protect your portfolio. Prioritize protecting your investments from significant losses. And again, this is what Jay himself says. Rule number 2, stay hedged. Maintain a consistent level of hedging to manage risk, regardless of market conditions. Rule number 3, maintain a long-term focus. Again, directly from his book. Avoid making decisions based solely on short-term market fluctuations. Number 4, keep it simple. Utilize straightforward and effective hedging strategies that are easy to understand and implement. Number 5, stay disciplined. Stick to your hedging plan and don't let emotions drive impulsive investment decisions. So as far as a description of number 1, some further description, protect your portfolio. He says, he actually recommends using options and other hedging tools to create a protective buffer against market downturns. This involves purchasing put options or employing other strategies that can help offset potential losses. Purchasing put options. Where have we heard that before? This comes directly from Jay's book. So, okay, so that was a description of number 1. And then number 2, staying hedged. Pestrichelli suggests maintaining a consistent level of hedging regardless of market conditions. This involves regularly adjusting your hedging strategy to align with changes in your portfolio's value and risk exposure. And then for number 3, got to change screens here real quick. Number 3 was maintain a long-term focus. Pestrichelli emphasizes the importance of not getting swayed by short-term market fluctuations. He suggests focusing on the long-term goals of your investment portfolio and avoiding knee-jerk reactions to temporary market movements. Hold on a second. I'm trying to make sure I'm not regurgitating myself here. Oh, I see some comments here. We'll get to the comments at the end. I'm trying to save them till the end. I used to read all the comments during the video, and it just like distracted me. Okay, so what were we on? Number 4. Number 4 was keep it simple. Pestrichelli advises using straightforward hedging strategies that are easy to understand and implement. He discourages the use of overly complex strategies that could potentially lead to confusion and mistakes. And then for staying disciplined, he stresses the need to stick to your hedging plan and avoid making impulsive decisions based on emotions. Okay, I'm sorry guys, I read this already. let's see here. I'm kind of screwed up on my screens here. Apologies. We are teleprompter free and live. So let me see. I gave you the 5. And I'm going to explain protecting your funds with put options. So the tip number 1, identify vulnerable holdings. Determine which stocks or assets in your portfolio might be more susceptible to market downturns or increased volatility. Calculate a hedge ratio. Decide how much of your portfolio you want to hedge. Pestrichelli recommends hedging around 30 to 50% of your portfolio. Imagine that. Although this can vary based on individual risk tolerance. Tip number 3, purchase put options. For each vulnerable asset you've identified, purchase put options with strike prices that reflect the potential drop in value you want to protect against. The number of put options you purchase should correspond to your hedge ratio. So it's important to build on the prior step when you're doing that. As far as expiration and costs, put options have an expiration date. So you'll need to select options with expiration dates that align with your hedging time frame. Keep in mind that purchasing options involve costs, known as option premium, which can impact your overall strategy. And some of these are basics for us that are familiar with options trading. And then continuous monitoring. As the market evolves, keep an eye on the performance of your portfolio and the corresponding put options. Adjust your hedging strategy if necessary to ensure your protection remains effective. As far as rule number 2, you want to understand your risk tolerance. Determine your personal risk tolerance and investment objectives. This will guide your decisions on the level of hedging that's appropriate for your portfolio. Select appropriate hedging instruments. Choose the appropriate hedging instruments based on your risk tolerance, investment horizon, and the assets in your portfolio. Pestrichelli's book primarily focuses on using options, such as put options, to hedge against market downturns. And then you want to decide, like we said, hold on, I apologize here. My screens are screwed up. Rebalance. Okay, define your investment goals. Clearly define your long-term investment objectives. Are you saving for retirement, a major purchase, or generational wealth? Having specific goals will help you stay committed to the bigger picture. Create a diversified portfolio. Build a diversified investment portfolio that aligns with your goals, risk tolerance, and time horizon. Diversification helps spread risk and can mitigate the impact of short-term market volatility. Avoid chasing trends. This is from Jay's book. Keep in mind. He says, avoid chasing trends. Steer clear of chasing short-term market trends as they can lead to impulsive decisions. Instead, focus on investments that align with your long-term goals and have a solid foundation. Number 4, ignore short-term noise. Tune out the daily market noise and media hype. Short-term fluctuations are normal and often have little bearing on your long-term goals. And then stick to your plan. Develop an investment plan that outlines your asset allocation, risk management strategies, and long-term objectives. Stick to this plan even when markets become turbulent. Reevaluate periodically. While you maintain a long-term focus, periodically review your portfolio to ensure, hold on, did I read this one already? Ensure it remains aligned with your changing goals and risk tolerance. Make adjustments as needed, but avoid knee-jerk reactions. Embrace patience. Understand that achieving your long-term goals may take time. Patience is key in navigating market ups and downs without losing sight of the bigger picture. Educate yourself. Continuously educate yourself about the principles of investing, market cycles, and economic trends. This knowledge will give you the confidence to stay the course during challenging times. Number 9, and this is a bit of a surprise here, but seek professional advice. Or that can come from watching YouTubers like myself. And then keep it simple. Focus on core concepts. Stick to the core concepts of hedging and risk management. Avoid getting bogged down in complex strategies that might be difficult to grasp or execute. Choose familiar instruments. Opt for hedging instruments and strategies that you're familiar with. If you're comfortable with options, for example, you can use put options to create a hedge. Avoid overcomplicating. Resist the temptation to add layers of complexity to your hedging approach. Simple strategies are often more effective and easier to manage in the long run. Understand costs and benefits. Good economic concept. Before implementing any hedging strategy, thoroughly understand the associated costs and benefits. Consider how the strategy might impact your overall portfolio performance. Prioritize transparency. Ensure that your chosen hedging strategies are transparent and clearly understood by everyone involved. This is particularly important if you're working with a financial advisor, which I don't recommend, or managing investments on behalf of others. Take time to educate yourself about the basics of hedging, the instruments you're using, and the potential outcomes. This knowledge will empower you to make informed decisions. Okay, and then let's see. Bear with me here. The stay disciplined rule emphasizes the importance of adhering to your chosen investment and hedging strategies with discipline and avoiding impulsive decisions based on emotions. Here's how to implement this rule effectively. Develop a well-defined plan. Create a clear and comprehensive investment plan that includes your goals, risk tolerance, asset allocation, and hedging strategies. Stick to your plan. Once you've developed your plan, stick to it regardless of short-term market fluctuations. Avoid making sudden changes based on fear, excitement, or market noise. Avoid emotional decision making. Emotional decision making can lead to impulsive actions that don't align with your long-term goals. Keep emotions in check and focus on the rational aspects of your plan. Set and follow rules. Establish specific rules for when and how you'll make changes to your portfolio or hedging strategies. Having predefined rules reduces the likelihood of making decisions on a whim. Regularly monitor. That's a key. Regularly monitor. Regularly review the performance of your investments and the effectiveness of your hedges. This doesn't mean making constant changes, but rather assessing whether your strategy is on track. Okay. And then let's see. Some description of, let's see, avoiding market timing. Trying to time the market by predicting short-term price movements is often counterproductive. Stick to your long-term plan instead of attempting to make quick gains. Educate yourself, which we've said already. Continuously educate yourself about the principles of investing, risk management, and market behavior. A strong understanding of these concepts can bolster your confidence in your chosen strategies. Use technology wisely. Leverage technology and tools to track your portfolio's performance and stay informed about market trends. However, avoid making impulsive decisions solely based on real-time data. Remain patient. Investment success is built over time. Stay patient and resist the urge to make drastic changes in response to temporary setbacks. Seek accountability. Share your investment plan and goals with a trusted friend, family member, or financial advisor who can help hold you accountable to your disciplined approach. By maintaining discipline, you reduce the likelihood of making costly mistakes driven by emotions. Adhering to a well-thought-out plan increases your chances of achieving your long-term financial goals and weathering market fluctuations with confidence. Pestrichelli's book delves further into strategies for cultivating discipline in your investment approach and provides insights to help you stay on track. Okay, now I think that was it. I might have skipped around a bit, but I thought you all might find that interesting, that he talks quite a bit about hedging your investments. He's got a whole book on it, obviously. And he talks about using options to hedge, protective puts. Like I say, where have we heard that before, right? Okay, now we will look into some comments here. So let me stop the share. You all can see my awesome face fully. And then let's see, StreamYard, here we go. Okay, let's see here. Okay, we don't have too many comments. When is he coming on again? That is top secret info. But all I can tell you, sometime in the first quarter of the year. We're already 1 month in, so that should narrow it down for you. It's either 1 month or the other, right? Ramon Ramirez says, saludos, welcome, hola, ¿cómo está? Mike Johnson says, howdy. Sonia is on, one of my favorites, and I see you joined Discord today. So I hope you enjoy Discord. I think Jay is quite brilliant and bringing many answers to all the questions we throw at him. If I wasn't such a do-it-yourself type, I would ask how much he would charge to manage my money. Oh, he would probably be exorbitant. But I will tell you, my coaching rates are cheaper, actually. They were $50 an hour, but they went up to 75 because, we have to participate in the inflation bandwagon, which I noticed Jay's book went up also. So it appears, I guess he must be participating in the inflation bandwagon as well, which I don't anticipate we'll hear a whole lot about this year. But, so yeah, $75 an hour. But for a special one-time promo with the promo code THB, you get $5 off as for a flash sale if you purchase before the end of this video. So it's a bit of a joke. Of course, that's kind of what the grifters do. I, of course, am not a grifter, but I like making light of what they do. My hedge is money markets and CDs for the present interest rate environment. My hedge is actually out front. The lawn crew just trimmed it last week. Bit of a joke. You love my offer? All right. Well, I look forward to talking to you live on the Discord sometime. No, my hedge, like I said, when I showed my portfolio, my hedge would be real estate and my index funds. So, all right. Anybody got anything else for me? If not, thank you all for tuning in. Like, comment, and subscribe. If you haven't already, join the Discord, spread the word. We got to keep growing. So, I'm pricey. Oh, you wouldn't believe, you haven't seen pricey. Look at some of these channels, like the dude that runs the financial education channel. His top package is 20 grand. So, I'm all about capitalism and stuff like that, but sometimes there's a fine line between capitalism and just flat out ripping people off. So somebody that, I don't want to hammer anybody, but that channel, somebody with like a community college education that took like one accounting course, charging that much because they made all their fortune in Tesla. That's a bit, you could say, unethical. But anyway, it's not all that bad. I think from, considering all the expertise and all the value that you get from the coach, I don't think it's all that bad. But anyway, yeah. But yeah, 20 grand for those other packages. It's insane. And there's so many people on here like selling stuff too. Yeah, you know about that, right? Yeah, that's the financial education channel. I honestly like some of the big channels on here, like I don't see a lot of difference between like me and them, but there's something that happened that got these channels to grow to millions of subscribers. So it must be the whiteboard with the like the markers, like the dry erase board. That must be it. He has a new hair color. What is it, like green or pink? Oh, no, that was Meet Kevin. He used to do that. Yeah, that's just insane, though. So I've actually been ripped off on stuff, too. And that could be a whole nother podcast, of course. Actually, that's a great podcast idea. There's all kinds of stuff they sell. There's like trading software, stuff to beat the market. There's all these, like everybody seems like they're selling something. I don't sell too much. The one thing I would consider selling is duplicates of the advanced financial forecasting equipment, because it tends to be accurate, as you all see. What would be a good price for that? I was thinking for one of my spreadsheets, I was thinking like $19.95, not $19.95, but like $19.95. Knock off like $5 for early signups. That's literally what they do. So I try to make light of it, of course. But anyway, so yeah, Jay's book. Yeah, his book went up, I guess, because these funds are getting more popular. Meet Kevin. You say he's the worst, a complete psychopath, but he's successful, though. I got to give him credit. The guy's got an insane work ethic. He's successful. He's charismatic. But yeah, he's kind of all over the place. I like his personality, actually. But like I wish I have a pretty good work ethic. Like I wish I had his level, because he's like next level. Like you do see, say what you will, but like he puts a lot of time into stuff for sure. What do you think the dividend of Tesla is for this month? I would hope it would stay at 58 cents. Let's see. Will it stay? Will it stay at 58 cents? We'll find out an answer right now. It says yes, definitely, and it's never spit out an answer that fast. How about that? It seems certain, but me personally, I doubt it will stay at 58 cents because we've seen a lot of price drop in it. Of course, I just asked the 8 ball. I could charge 20 grand for that because it gives some quality answers, like really quality answers such as like yes or no. I mean, can't beat that. 20,000 would be cheap for Jay. Oh, I agree. It would for him, for his services. I think it would be absolutely. Ill-begotten gains are still ill-begotten gains. I don't want money if it means selling my soul. Well, buddy, that's capitalism to an extent. I mean, I'm a capitalist, but I see a lot of shady stuff that goes on. And yeah, I mean, even some of the ads that come on in the finance space, like everybody's selling some kind of a program. I would hate to see somebody that like spends all their day online. Like you could end up like getting ripped off from like all your money if you like bought all this stuff that they advertise. I mean, it's crazy. Well, thank you. I'm glad you think so. I'm glad you think I'm funny. But yeah, a lot of these programs and stuff, I'd say a lot of them are crap. There's stuff I want to put out. I would charge a reasonable price for it. But it would add value. It wouldn't be just, some empty program. Like there's a thing out there that's like a $3,000 trading software that's like based on like AI, like predictive analytics that predicts what the market is going to do. I bought something like that once. It helped me make like 2 or 3 good trades. So I guess you could say it paid for itself, but you got to pay for the freaking data every year, like $300 on top of it. So some of these things are just kind of crazy, Well, you know what? I'm going to keep going. You all keep commenting, so I'm going to keep going. I got my beer in my hand and stuff, and I'm rolling. Any strategy that actually works doesn't need the money from people trying to learn. Yeah, if it works. Well, here's what I always say. So you raise a really good point. And as you all know, the more I drink, the better my financial knowledge shows. So what was I going to say here? Oh, all these options trading courses. So to your point, right? If these people are so successful, this is what I always say. If they're so successful, why do they need to sell courses? And I asked one of these people directly, and the answer that he came up with or that he concocted was, well, when we become successful trading, day trading, we just get bored and lonely. So we want to do something with our time and talk to people and charge for it. He omitted that part, but the first 2 parts, he said, they get lonely and bored. So I guess that's not a bad gig. Like if you're going to fight loneliness and boredness and make a lot of money for it, that's a pretty sweet deal. I would say just add value if you're going to do that. Oh, come on, man. Does that look like a Guinness? Guinness is way darker. But yeah, no, I haven't actually had one of those in a while. Let's see here. Very smart. You're talking about me, of course, right? Thanks for all your compliments. It helps my esteem a bit. Not that I need, I'm kind of full of myself sometimes. I try not to be though. But it was a fun week, wasn't it? A fun week with all the drama and stuff. We've pretty much patched everything up, but there will be more. There will be other channels that come along. There will always be more. I enjoy it a little bit. Anyway, I agree. In our society, it's all about who can make the quick buck, like the fastest, and screw people over. I mean, I couldn't live with myself if I wasn't making like an honest. If I wasn't doing things honestly and providing value, it would just be hard for me to live with myself with that. Let's see, what do we have here from Mr. Charles? New ETF I've been buying up is KMLM. It's a managed futures ETF, pays annual one-time 8.7% dividend, goes up when equity goes down. I like it for a high income yield portfolio hedge. Well, we'll look at that one. All right, so he says, Coach, you still never told us what you do. Well, I'm a coach. I thought I'm the coach, the financial coach. So what should I say to that? I'm a hustler. I have several side hustles. I house hack. I invest. I churn credit cards. Um, I what else do I do? I do a lot of stuff. I lose track, honestly. So I covered investing, house hacking, um, and then drinking and knowing things. And what else? Oh, like here, I'm a YouTuber. That's important, right? Um, cabinet salesman. He figured me out. I mean, someone finally figured it out. You guys keep asking me like why I'm always in my kitchen. Someone finally figured it out. I'm just kidding. That's I just do that because it's uh-oh. You see now you all are starting to really figure things out here. I gotta you all are too smart for your own good sometimes. Actually, so I do have a day job. So all those other side hustles are just side hustles. My day job, I am in the finance industry. Um, I've worked for I've worked for two of the big four financial firms. I also used to work for financial advisors. So, oh, you think so, huh? That could be the next if this whole YouTube thing doesn't work out. So covering finance, you're covering investments and stuff like that. But like that's another angle. It's social media income, but it's obviously another angle. Instead of showing off your brains, you're showing off other stuff. You know, everyone has worked for Goldman Sachs. Well, I have worked for two of their competitors, but I will tell you this after I have a sip. So I've worked for oh, Goldman. I didn't work for Goldman, but when I was graduating college the first time, they were hiring, but they wanted to pay like $50,000 a year to live in New York, and I was like, "There's no way." I mean, it would look good having that on your resume, and then if you get cut from something like that, like if you be an investment banker and then you get cut, and within 2 years, it's like getting cut from the Yankees. You can go anywhere. Um, So let's see here. 8 ball wholesaler. That's actually, I think there's 10 of them. I only named like half of them. That must be another one. Um, my assets. Hey, I should do a side hustle video. I should do a video on how much income can be made on OnlyFans as a side hustle, literally as a hustle. You guys have great ideas, and this is a fun group. I agree. I mean, we all make it fun. I'm definitely having fun with you all. I've gone longer than I exceeded the video topic, but I'm definitely vibing with you all. Sonia, what did you spend all your money on? Well, she spent a lot on my financial coaching sessions. Um, Not yet, but maybe. I don't think so. You're asking her what she spends her money on. I get the sense she invests. I don't think she's a huge spender. She invests in assets that appreciate in value, like the coach does. Great minds think alike, right? So I would assume she spends money on like real estate and assets and stuff like that. What do I think about Palantir? I know the name of the company. How's that for an answer? Actually, I didn't show you. I only showed you the YieldMax portion of the portfolio. There was other stuff there. I have Palantir stock. There's mixed opinions on that. I would say it's doing well. I'm actually up in my positions. You wouldn't even know what to do with 30K a month. Well, you can give 20 of it to Jeremy for his program, and then the other 10 to me for my program. I'm just kidding. If you have like 30K, oh, you're saying per month. Well, that's a lot. That's like 360,000 a year. You must be a baller after all. Um, well, with that, I would definitely have a different strategy for sure. I thought you were saying like with your first 30,000. The point is to spend money around some point. You got to spend a little. I mean, we as financial people, I think the last thing we want to do is spend money. We want to make money. Like, I feel like we all have this mindset. It's almost like to a normal person, it's almost like a disorder. Like, we hate spending money. We like making the money, but we hate spending the money. The problem is, most of society, don't tell anyone I said this. This is just between me and you all watching. Not like 2,000 people aren't going to see this, you know. So this will just be our little secret. But most of the people, most of like average people, and I'm not saying this to insult anyone, but so we financial people, we hate spending money. We're talented at making money, not so good at spending it. For most of society, it's the opposite, and we want to change that. The opposite is they're great at spending the money, but not so great at making the money. And we want to flip that around. And I think we can do that because there's only two types of people in the world: people who are financially savvy and people who have yet to become financially savvy, right? Also, two types of people in this world: people subscribe to this channel and current subscribers and future subscribers. So it's pretty easy. You know, there's all these ways that, you know, they try to divide people and stuff, but it really boils down to just two groups of people, right? So let's see. It's like a happy hour. Exactly right. I'm kind of a crazy saver. You are. You know what I think I'm going to do? I have so many of you on right now, but this has already gone over 30 minutes. I'm going to hop on another live stream and we'll just have like a free for all discussion. What do you all think? So let me do this. I want you all to come right back. You all have to attend the follow-up class. But this one has gone for over 30 minutes. But I'm going to do another one, and we'll talk about coaches' tips. We'll talk about side hustles. How about that? Wow, look at her. Wow. Are you single? I'm liking what I'm hearing and seeing. I want to have enough money to live like a rap video. Oh, you know, that's what gets attention for sure. I got the $ glasses and the hat and all. I need to break that stuff back out. Fully invested all high yield dividend payers. He's got the right idea. Yeah. 10 kinds of people, those who understand binary and the rest. I like that computer joke, right? Yeah, coach, you're going to the top. Well, thank you. I'm going to the top and we're all along for the ride, right? Like they say, a rising tide lifts all boats. All right, on that note, I will be right back. We're going to end this one, but we will be back with a side hustles video. So tune in for that. Thank you all. Take care. See you very soon.